Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Affiliated Managers Group Inc. Annual Report. Affiliated Managers Group Inc. offers a wide range of investment management services to various clients. The company provides advisory or sub-advisory services to mutual funds, which are then distributed to retail, high net worth, and institutional clients through intermediaries such as independent investment advisors, retirement plan sponsors, broker-dealers, and bank trust departments. In addition to its mutual fund services, the company offers investment products in various styles, including value and growth equity, emerging markets, quantitative, alternative, and fixed income. These products are distributed through the institutional channel, catering to clients such as foundations, endowments, corporations, municipalities, and defined benefit and contribution plans. The company also provides customized investment counseling and fiduciary services to its clients. With a global presence in multiple locations, Affiliated Managers Group, Inc. is well-positioned to serve a diverse range of clients worldwide. The stock price of Affiliated Managers Group, Inc. AMG, has skyrocketed by 88.58% over the past year due to a combination of strong financial performances, a strategic pivot towards alternative investments, and disciplined capital allocation initiatives. One key factor contributing to this surge is AMG's robust earnings performance throughout 2025. The company consistently surpassed earnings per share, EPS, estimates in its quarterly reports, with notable beats in the second and third quarters. This was driven by record inflows into alternative strategies, which grew 35% year-over-year to $373 billion of assets under management. AMG's strategic shift towards alternative investments has also been a significant driver of growth. The company reported a $97 billion increase in alternative AUM in 2025, with alternatives now accounting for approximately 60% of its run-rate EBITDA. This focus on alternatives has contributed to the company's strong financial performance and has been a recurring theme in earnings reports and analyst discussions. In addition to its strong financial performance, AMG has also demonstrated a commitment to returning value to shareholders through disciplined capital allocation initiatives. The company repurchased approximately $700 million of its stock in 2025, reducing shares outstanding by 11%, and committed over $1 billion to 5 new growth investments in 2025. The positive analyst sentiment and stock milestones have further contributed to the surge in AMG's stock price. Analysts raised price targets and maintained buy ratings, citing robust growth in alternatives and improved valuation metrics. The stock reached a new all-time high of $330 USD on January 20, 2026, solidifying its position as one of the top-performing stocks in the industry. Affiliated Managers Group, Inc. market capitalization of $9 billion is significantly larger than the average industry peer of roughly $0 billion. This shows that Affiliated Managers Group, Inc. holds a significant advantage in their industry. Affiliated Managers Group, Inc. trades at a higher price-to-earnings ratio of 14 times and a higher price-to-book ratio of 2.76 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 47% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The company has aggressively reduced its share count by more than 5%, indicating a strong shareholder-focused capital allocation approach. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline are multifaceted, encompassing both internal and external factors. On the growth side, investment opportunities with high-quality firms, equity investments in existing affiliates, and seed or growth capital provided to affiliates have been key contributors. Additionally, performance fee earnings from liquid alternative assets, stability and diversification of earnings through low correlation strategies, and the reputation and investment performance of affiliates' management teams have also driven revenue growth. Furthermore, the success of distribution efforts, maintenance of strong business relationships with major intermediaries, and continued client service offerings have all played a role in driving revenue growth. The addition of assets associated with new partnerships, with affiliates operating in growing areas within alternative strategies, has also contributed to increased revenue. On the decline side, removal of assets under management associated with the sale of certain minority equity interests in affiliates, current and projected declines in assets under management, and decreased forecasted revenue have all been drivers of revenue decline. The closure of one of its affiliates' mutual fund products and decline in fair value of certain mutual fund assets due to current and projected declines in assets under management have also contributed to revenue decline. In summary, the primary drivers of revenue growth or decline are influenced by a range of factors, including investment opportunities, performance fees, client relationships, distribution efforts, and market trends. Net income experienced fluctuations between 2023 and 2025, with a notable increase of $133.1 million in 2023 due to the gain from selling an equity interest in Veritable, LP. However, this growth was short-lived, as net income decreased by $59.2 million in the first quarter of 2025, and further declined by $37 million in the fourth quarter of 2025, both times due to impairment of indefinite-lived acquired client relationships. Profit margins also underwent significant changes over the same period. Initially, certain mutual fund assets saw a decrease in profit margins from -34% to 0% over 5 years. Additionally, long-term revenue growth rates dropped to 0%, indicating stagnation in this area. Furthermore, discount rates decreased to 10.5%, which may have contributed to the decline in profit margins. These changes suggest that the company faced challenges in maintaining its profitability and revenue growth. The company's debt level has shown some fluctuations, but no significant changes are evident. As of December 31, 2025, the outstanding debt stood at $2.7 billion. However, a notable development is the repayment of senior notes worth $350 million in Q3 2025. On the other hand, the interest expenses have increased due to the accretion of debt and amortization of debt issuance costs. The company's financial situation has undergone some changes, but they do not appear to be drastic. The outstanding debt remains substantial at $2.7 billion, while the repayment of senior notes is a positive development. However, the increase in interest expenses due to the accretion of debt and amortization of debt issuance costs may pose a challenge for the company's financial management. The company's debt level has not changed significantly, but there are some specific amounts mentioned. The outstanding debt as of December 31, 2025, is $2.7 billion, while senior bank debt stands at $1.25 billion revolver. The repayment of senior notes worth $350 million in Q3 2025 is a notable development. Regarding interest expenses, they have increased due to the accretion of debt and amortization of debt issuance costs. The company's financial situation has undergone some changes, but they do not appear to be drastic. The outstanding debt remains substantial at $2.7 billion, while the repayment of senior notes is a positive development. However, the increase in interest expenses due to the accretion of debt and amortization of debt issuance costs may pose a challenge for the company's financial management. The company's debt level has not changed significantly, but there are some specific amounts mentioned. The outstanding debt as of December 31, 2025, is $2.7 billion, while senior bank debt stands at $1.25 billion revolver. The repayment of senior notes worth $350 million in Q3 2025 is a notable development. The increase in interest expenses due to the accretion of debt and amortization of debt issuance costs may pose a challenge for the company's financial management. Management at Affiliated Managers Group, AMG, is optimistic about the company's outlook, citing a focus on generating long-term value through investments in high-quality independent partner-owned firms. The company's strategy involves a partnership interest model where it shares revenue with these affiliates, without regard to expenses for some and less agreed-upon expenses for others. To achieve this goal, AMG is managing its exposure to market risk and foreign currency exchange rates through various hedging strategies. However, the company acknowledges that market volatility and economic downturns pose significant risks to its business, particularly if they lead to reduced demand for investment services. Despite these challenges, AMG's financial performance has been strong in recent years, with revenue increasing to $2.7 billion in 2025 and net income reaching $463 million. The company's total assets have also grown to $16.5 billion as of December 31, 2025. Overall, management is confident that AMG's strategy will continue to drive long-term value creation for shareholders. The company has made several strategic acquisitions and divestitures as part of its growth strategy. On the acquisition front, the company has invested in various firms specializing in industrial logistics, real estate assets, global multi-strategy investments, services sector, energy transition, structured credit investment strategies, and liquid alternatives management. These minority investments are aimed at expanding the company's capabilities and expertise. In addition to these minority investments, the company has also formed a strategic partnership with Brown Brothers Harriman to acquire a minority equity interest in BBH Credit Partners. Furthermore, the company acquired client relationships and goodwill resulting from business combinations. This demonstrates the company's commitment to growing its business through strategic partnerships and acquisitions. On the divestiture side, the company has sold minority equity interests in several firms, including Peppertree Capital Management, Montrusco Bolton Investments Inc., and private credit business by Comvest Partners. The sale of these businesses is likely aimed at optimizing the company's portfolio and focusing on its core strengths. Additionally, the company has deconsolidated affiliate-sponsored investment products due to a reduction in ownership or other reasons. Based on the extracted summaries, it appears that the company has engaged in a significant activity related to its capital structure. Specifically, the company has repurchased shares of common stock as part of its strategy to manage its equity and potentially enhance shareholder value. According to the information provided, the company repurchased 3.3 million shares at an average price per share of $212.92. This suggests that the company is actively managing its capital structure by reducing the number of outstanding shares in the market. However, there is no mention of dividend payments, indicating that the company has not distributed any cash to shareholders in the form of dividends. That concludes the financial summary for Affiliated Managers Group Inc. Feel free to comment below, and I will be happy to answer them when possible.